I want to bring in Michael Sheldon, CIO and Executive Director of RDM Financial Group at Hightower. Michael, good morning. It has been a big week for the markets. So we've seen really strong earnings, a pandemic era low when it comes to weekly jobless claims, but also a lot of fear, or at least on Wall Street, about a raise in the capital gains tax. So what are your big takeaways from the week?
Sure. Well, good morning, and thank you for having me. A couple of things to talk about. One is the economic data that we've seen in recent weeks continues to be very strong, and that points to the surge in economic activity that we're likely to see this quarter, next quarter, and possibly into the second half of the year. The second thing is that we're in corporate earnings season right now. So after today, we've probably had earnings from about one-third of all companies so far, and earnings for the second or third quarter in a row continue to be much better than expectations. And then the third thing, obviously, yesterday equity markets sold off a bit due to potential talk about rising taxes. So it shouldn't be a complete surprise because this is something that Biden talked about when he was running for president. I think when we actually hear of the final version, we're likely to see somewhat scaled back talk of an actual rise in taxes. But that is something that'll probably weigh in the markets at least for a number of months until we get more clarity on that.
Some analysts yesterday were saying that if investors actually thought that the capital gains tax would go up to about 40%, as we heard yesterday, the markets would have sold off. The Dow would have been down 2,000 points, not 300. Do you think that's right? And is there a real risk here of derailing all of this growth, at least on the stock market?
Well, I think, again, once all is said and done, not all members of Congress are on board with the aggressive tax increases that President Biden wants to put in place. So I think we're likely to get somewhat of a scaled back version when all is said and done. And that's probably why the market's reaction hasn't been more serious, as you just mentioned. But I think importantly also, you want to keep your eye on the ball and the fundamentals of the economy. To us, the economic backdrop is sort of based on a three-legged stool. One is the rollout of the vaccine, which is going well in the United States. Europe and the rest of the world is lagging behind the U.S. and will likely catch up next year. Second is the stimulus spending that's going on right now. We've had massive stimulus spending. That will start to trail off at some point, but we could get more spending from Washington because of the infrastructure spending. And third is accommodative monetary policy, and that's likely to stay in place. Chairman Powell has said that he's likely to keep rates accommodative at least until we see higher inflation and the unemployment rate continues to make further progress.
When you think about inflation, I was reading some of your notes. I know you're not overly concerned, but we are hearing from more and more companies that are raising prices, everything from diapers to just home goods and everything else. And we talk about paying for all of these plans that President Biden has, and now this pushback against raising taxes, at least that capital gains tax. So at a certain point, don't we need to pay for this stuff? And why aren't you worried about inflation?
Well, you raise a couple of issues. On the inflation front, it's definitely evident we are seeing higher commodity prices in a number of areas. You could look at things like corn or wheat, for example, in the commodity agricultural space. If you look at lumber prices or steel prices, those have been going up quite a bit. There are a number of factors at work. I think you have the money supply right now is rising at a rate of more than 20%, which we haven't seen in a decade. That's one thing. We have a tremendous amount of fiscal spending that we've talked about, and that's colliding with the fact that the economy is reopening right now. So people are going back to work, but more importantly, people are spending again. Consumer confidence is slowly starting to rise. So we have a number of factors coming together. But the question really is this something that's sustainable? Will we likely see a continued rise in inflation over the next several years, or are we likely to see a rise in prices and then they start to level off? So that's a hard thing. It's been very difficult for the government and the Federal Reserve to create inflation over the past 2 or 3 decades. We look at something called the 3Ds, which basically means rising debt, demographics, and disruptive technology. Those 3 factors are helping to keep inflation in check, but we certainly are likely to see higher inflation for a period of time. The question right now is whether it's going to be a period of years, and we're just not sure about that yet.
When you look at the market, do you think it's overvalued? And does it matter if it is? I know you're obviously saying that you think that we're going to still see markets continue to climb. And what do you see as the biggest risk right now for the markets?
Right. Well, we remain moderately constructive on the markets. Again, we think we're probably in the early innings of a multi-year economic cycle. Economic cycles tend to last a number of years as opposed to weeks or months. The interesting thing about this market advance is it's more broad-based than we've seen in the past. You're seeing many different sectors of the market as opposed to just technology participating. We think that's a healthy thing. Yes, there are risks. There always are. Interest rates could rise too far too fast. The Federal Reserve could raise interest rates before anticipated. Tax increases could rise more than expected. And then there's always a geopolitical event overseas that really is hard to time, but just is always on our radar.
Great insight. Michael Sheldon, Executive Director and CIO of the RDM Financial Group at Hightower. Really good to have you on today. I appreciate it.